Good morning. Wednesday, August 20th. I'm Zach Howard, and I'm happy to be back with a morning market update. Been infrequent as we wind down summer, and a lot is happening in markets. It's a time to kind of enjoy the good sun and peacefulness that we have left. Get back to more frequent updates into the fall. Message for the day is calm down. Everybody needs to calm down out there. Everybody is so emotional all the time in all areas of life for the last 5 years. It's a product of the machine, the matrix that wants everybody revved up on stimulants of various types, technology wise and otherwise, all the time. But just zoom out. So yesterday, the market, oh my God, the NASDAQ, the QQQ sold off 1.39%. I think the S&P 500 at its $52, $53 trillion fiat market cap was down 0.5%. And mainstream financial media are losing their mind once again. On X, people are losing their mind. The retail traders who just started trading are losing their mind. You need to zoom out, guys. You need to understand the message that the design of markets and the monetary system is up and to the right. We are in a solid risk on environment still. Volatility, the low end of that VIX falls, continuing to say the bull market is not over. Could we get a little crimple here in markets? Absolutely. It's probably a positive thing. But when you had 70% of stocks in the S&P 500 yesterday actually up on the day, 354 in this chart here from Tier 1 Alpha, got to zoom out. Look at the bigger picture. Palantir down big 9% yesterday. Nvidia at its $4.2 trillion market cap down 3.5%. AMD down 5%. Yeah, that's going to move the market overall in that short-term window. But let's look at the long-term picture here. This is the S&P 500. Last month, daily all-time highs. Markets don't go from all-time highs daily to crashes. Consolidation, pull back. That's what we want to see. Longer term, up and to the right. This is the trend. Are we going to get a little correction into a consolidation before next leg higher? That's what we need to go higher. We need a consolidation. But let's use our brain here. Let's stop thinking with our emotions so much and look at the math. If there was really stress in markets, you would start to see it show up in the credit side of markets first. That's what moves the boat for bigger picture things inside of a macro lens. Two charts here I'm looking at. They're part of my daily process. First on the right, the move index, which is the volatility of U.S. Treasuries. Look at the chart, man. Since April, where it shot up to 140, it's down almost below 80. Down to the right, volatility melting away like an ice cube in August for U.S. Treasuries. The high yield index, volatility reading the ICE BOA option spreads in the spread in high yield credit, the junkiest of credit in the credit space, is still less than 300 basis points. No need to be concerned. If I was really concerned about the macro and the economic environment going forward, this thing is going to shoot well past 4.5, 5. High yield is still bullish. Okay, so no signs of concern there. Bitcoin, same thing last week, 124 all-time high to 114, and everybody is like, is it over? Is it over? Is what over? $2.3 trillion asset? Bigger in its market cap than almost all the Canadian companies combined together, all the banks, all the pipelines, all the mining companies, all the real estate. Bitcoin, is it over? Oh, guys, zoom out. Zoom out. We are consolidating for the next leg higher. Could we get down to 105? Possibly. Today in my daily notebook, Bitcoin says 112 to 123. Big wide range. We could get a big snapback as volatility comes back into Bitcoin before it comes back into equities. Bitcoin is a leading macro indicator. The macro regime is setting up for continuous flows into bullish trades and to be a bull. Fade the bearish narratives. This is the University of Michigan Consumer Sentiment Index in August, 58.6, 59. Like, we are down to levels you only see during like COVID, recessions, bad times. People's minds of how they are voting in these surveys, their narratives are being driven by media, by the influences they hang out with, fade the doomers in all areas of our life, okay? If you had played the bottom of the sentiment index in historic times, look back on this chart 12 months later, you are killing it in the S&P 500. 25% higher, 6x returns if you fade these low sentiment readings 12 months out. The Trump administration needs growth to accelerate on a nominal basis. They need to debase the currency to do that. You need to recognize what the message is continuous out there in the media. They're trying to say what the game plan is. Markets need to go higher. That is part of the game that keeps it all together. Reminiscence of a Stock Operator. I've read this book 5 times, 6 times since I bought it. It's a 100-year-old book. There's lots of good information in here, lots of highlighted areas. Great quote here. One of the sections of the book, like I say, is written 100 years ago as a timeless book. No matter when it was written, it applies to humans. Humans' nature of fear and greed that never change, no matter what the year. It just compounds over time in extremes one way or the other. Zoom out, stay grounded. Don't play the game on tilt. Don't play any game on tilt. Take your emotions out of the game. And that's what I got for you today. Fade the doomers. We will see you soon. Cheers.